Hello and good morning, ladies and gentlemen. Welcome to today's virtual non-deal roadshow. My name is Julia Perron, a virtual event moderator here at Renmark Financial Communications. On behalf of our team, we'd like to thank everyone in Chicago and surrounding areas for joining us today for the presentation of Generation Mining, trading on the Toronto Stock Exchange under the ticker symbol GENM, and on the OTCQB under the ticker symbol GENMF. Presenting today is Kerry Knoll, Chairman. And with that, I will hand it over to Kerry.
Thank you for coming out today, Easter Monday, to the Marathon Copper-Palladium project presentation. I'll just get right on with it here. This is our standard presentation, so for those of you that follow us closely, there may not be too much new, but there is the opportunity to ask some questions. The first question is why Generation Mining? We have a Copper-Palladium project in Ontario, which has been chosen the number one mining jurisdiction in the world by the readers of Mining Journal out of London, England. We're shovel ready. We've got all our permits. We've trading at a very strong discount to the net present value and the feasibility study that we did last year, and only 10% of the net present value based on spot metal prices at the end of December last year. So there's a lot of value to be had here, and I'll get into some of the reasons why we think we are undervalued a little bit later. But we've also got really, really strong support from the local Indigenous community. In fact, they did a private placement into us, which is probably, I think, the second one I've ever seen in this business. We've also got very strong support from the local town and the province and the federal government as well. So we are a polymetallic project. We've got pretty much equal value in palladium and copper production. We've got a very substantial platinum credit as well, and a decent amount of gold and silver as well. So we've got 5 metals. It's always nice to have a variety of metals because, of course, if one of them happens to be down in a particular year, the other ones can usually support it. And we've got, in that black box in the middle there, you can see the first 3 years of operations, we're going to be producing 50 million pounds of copper and 240,000 ounces of palladium per year. Very, very strong. And a really unusual thing about us is that 90% of our reserves, and these are the reserve numbers here, 90% of the reserves are in the proven category. Usually that number is 20, maybe 20, 25%, something like that. So very, very high confidence level in this deposit we've got here. We're located just north of Lake Superior, right on the Trans-Canada Highway. Very busy mining area just down the road from the Hemlo Gold Mine. And in fact, we're going to share the same town of Marathon with the Hemlo people. Alamos is nearby, Equinox just north of us, Impala, which is the only PGM property in production in Canada, is just north of Thunder Bay to the west of us. Wesdome's Eagle River is down a little bit south of us. So busy mining area. It still took us a while to get permitted, but despite all the activity in the area, but we did, and we got all of our permits last year. A little closer up, the gray area is our property, and on the right is the Marathon deposit. There's also 2 other deposits on the property that are not included in the feasibility study. And as you can see, we're just north of the town of Marathon. We're right on the Trans-Canada Highway. We've got the CPR main line there, the town of Marathon to draw a workforce from. There's a major power line that goes right through our property. We've got a construction camp that we have an option to own in town. And there's a lot of other towns in the vicinity, as well as indigenous, 2 or 3 indigenous communities that we could also draw a workforce from. And there's a commercial airport literally right on the property. In fact, we had to be careful locating our tailings disposal area because of the height restrictions regarding the aircraft landing. So that's how close we are to infrastructure. Why copper? Why is copper important? I think those of you who follow mining probably know the copper story well, but those of you who don't, maybe copper's really come into its own in the last little while. And the reasons for that are because of the electrifying of the world, first of all, the very slow uptake of new mining operations. And in fact, we've got a situation going on where last year Freeport, one of the biggest copper companies in the world, declared force majeure. The country Chile has downgraded its output for the next couple of years. QB2 with Teck has lowered their output forecast, and just last week Ivanhoe lowered their forecast. So everybody's lowering their forecasts. Grades are going down, and yet consumption is going up, and consumption is going up rapidly. And it's been going up about 2% a year probably for the last 50 years. But more recently, we've got things happening like electric cars. We've got these AI data centers. Huge amounts of copper are going into those. You're going to have coming in the next couple of years a huge rearmament of the militaries of the world because of all the wars going on. That's going to use a lot of copper. You've got robotics happening, again, a lot of copper, and just the transition to wind and solar and nuclear will require a lot more power lines around the world. So there's huge things happening on the demand side, and the supply side is very weak. And I'm just going to go on to the next slide here. This slide is probably the main reason why you need to have copper in your portfolio. If you look at the discoveries going from 1990 to 2010, there were tons of discoveries every year, 50, 60, 40, whatever the number is. And then in the last 10 years, there have been hardly any new discoveries. So now, since copper mines take about 15 to 20 years to get into production, those ones that were discovered in 2005 and 6 and 7 and 8 are going into production now. But the pipeline going forward is very, very thin. And that's despite huge advancements in exploration techniques. They're just not discovering any. The things that are on surface and discoverable quite easily seem to have been mostly discovered. The new deposits that are coming forward in the future are likely to be very deep in the earth, and those will take even longer. Those of you who follow Ivanhoe, for example, Ivanhoe has been at it now for over 10 years to get that mine into production when they first started construction. So it does take a long time for the deep underground mines. Anyways, you don't see this in any other commodity in terms of the lack of discoveries. So you've got lack of discoveries, you've got increasing demand, and that's a recipe for a huge uptick in the price going forward. I think copper in the next couple of years is going to surpass nickel in terms of price. Palladium is our other major commodity. It was very attractive to us right from the get-go because it's required by law in most countries in the world to be in every gasoline and diesel consuming vehicle. So you've got a built-in demand. It's of course not in electric cars, but electric cars seem to have stalled. But what's interesting is that hybrid electric vehicles, which are outselling electric cars more than 2 to 1, including in China, you've got a situation where hybrids use actually more palladium than a regular internal combustion car. You've also got a situation where 40% of the mine supply comes from Russia, which could be in jeopardy at any given moment, and 35% is coming from South Africa, where there's ongoing issues with electricity and water supply. You've got another situation happening that when palladium was a lot more expensive than platinum a couple of years ago, there was a lot of substitution by platinum going into the automobiles. And now that platinum is more expensive than palladium, that substitution is coming back. And that's an opportunity of about 1 million ounces coming back into the palladium market. And the palladium market is only about 10 million ounces a year. So it's pretty significant. And the other thing that's happening in terms of palladium is the demand coming into the ETFs. Just last September was one month I picked and looked it up, and there was $100 million went right into the palladium market, and that was one of the reasons for the rebound in the price last year. So you've got palladium, you've got copper, both strong, and you've got the only mine in North America really that produces both of those metals. So we did a feasibility study last year in March. That was an update from a previous feasibility study, and that had a net present value of just over $1 billion Canadian dollars, about 700 million US dollars, and that was based on 3-year trailing prices of the metal. So it includes that little trough that we had in the palladium and and platinum price going back a couple of years. If you look at spot prices at the end of last year, in December, right here, you've got a net present value of 2 billion Canadian dollars. And that's against a market cap right now of about just over $200 million. So less than 10% of the net present value at spot. The after-tax IRR, same thing, 28%, which is a great number in the feasibility study with 3-year trailing, but 42% at spot prices. And if you go down here and you look at our cost to produce these metals, and this is all in sustaining cost as a co-product, $781 for palladium, which is now trading at about double that, and $2, just over $2 for copper. And that is, of course, at trading at $5.50 these days in $5.50 US dollars. And if you did it as a net of byproduct situation, we're actually producing copper at a negative price. And just to put it into perspective, the copper in this project alone at today's prices would bring in about 300 million Canadian dollars, a little over 300 million Canadian dollars a year. That will more than pay the entire operating costs. So we're going to be producing 168,000 ounces of palladium and another 38,000 ounces of platinum a year. So 200,000 ounces or 210,000 ounces together at a cost of zero, net zero, if you take copper as funding the operating costs. This is, we talked about our short payback, and this is the reason why we're mining very high grades in the first couple of years. As you can see at spot prices, recent spot prices, more than $1.2 billion in revenue. That is our entire CapEx, and that's in year 2. So that's why we have a 1.3-year payback on this project, which is almost unheard of in the mining business. And of course, all these slides are on our website if you want to look at them in more detail. So this is what we've done in the past. We've arranged a stream with Wheaton. We've got our community benefits agreement with the local First Nations, the Bigdagon Nishnabeg. Last year, we revised the feasibility study, got all of our permits to build. We're one of the few unbuilt, fully permitted mines, critical mineral mines in Canada. We're now arranging our mine financing, and we're very close. I'll get into more detail on that. And in half 2, we hope to advance our detailed engineering, which started last month, and then also begin construction subject to the final financing that we're working on. And where's all that money going to come from? The $1 billion. We need a little more than $1 billion for a few other things, but so we've got a stream with Wheaton, $240 million. We've already drawn down 40 million of that, so 200 million more coming into the construction. Caterpillar or Komatsu, whoever we decide on, has indicated that leasing funds will be available of about $135 million. We've got a term sheet from a syndicate of banks, international banks, for a total of 400 million US dollars or 540 million Canadian dollars. We've also got a subordinated debt package with a government group, and I can't talk more about that until probably next month, but of another 200 million Canadian dollars. And then we're also talking with different government groups, both federally and provincially, for some additional financing. So the financing package is all coming together. We had hoped to have it in March this year. It's now more likely to be towards the end of April, but we do expect certainly this spring to be able to announce the full financing package, and that will allow us to begin construction this year. So how do we compare with other copper projects or other base metal projects? Well, we're kind of, in terms of our net asset value, and this is a consensus net asset values of these different companies, we're kind of at the bottom of that. And I think the reason for that, there's a couple of reasons for that. One of them being the fact that we are not financed, and I think people wonder how a company with our market cap can get financed, but I think we'll show them. I have raised this kind of money for projects that I've done in the past, so this is not new ground for us. We also have the lowest, of course, on this chart in terms of net present value, so we have the most room to move, and that brings us to the Lassonde curve. And those, if you look at companies like Artemis and Foran, who moved up the Lassonde curve as they went through construction, that's what I think is going to happen to us. And as we get through the construction, we have our team of people are second to none. They built mines this size before, and they built them on budget and ahead of schedule. So this is where we're looking to go. And here's a single example, a comparison with us with Foran, and these numbers all come from BMO, Bank of Montreal here in Canada. And as you can see, similar size mine, around $1 billion Canadian dollars. So yeah, around $1 billion Canadian dollars. We're actually going to be larger than Foran. They're 90 million pounds of copper equivalent. We're going to be 120 million. We've got our net present value is higher than them. Our IRR is higher than them, and that's on 3-year trailing numbers. And yet our market cap, and at the time the slide was made, was 225 million. It's slightly lower than that now, and yet Foran had an enterprise value at that time of 4 billion Canadian dollars. So that's kind of what we think is the opportunity for us to get to as we go through construction. And they were taken over by Eldorado when they were at the 85% constructed stage, and I think that there's a good chance that could happen to us as well. Some of our people I'll point out our more recent hires. Clinton is our VP projects. He's been fabulous. He's joined us in October. He's going to be quarterbacking the construction of the mine. Rachel Pinot also has worked with Clinton in the past, and as far as hiring and contracts and all of that stuff, she's an expert in that area. She's worked with some of the big companies. Eric, also our new VP engineering, just joined us, has done this many times before. We've got a very strong board of directors. Last year we brought on Kyle Kuntz, who's he's the VP projects at Equinox Gold, one of the top 5 gold companies in Canada, and he's been a great addition to the board of directors. Phil Walford, who's a geologist who won the Bill Dennis Award for a discovery of the Valentine project. Rebecca Hudson is an accountant. We like to have a nice balanced board of directors with different skills. And over on the bottom right here, we've got a couple of guys. Paul McRae and Jeremy Wyeth. They both have, again, worked together with those other folks. They were with De Beers, and they have built many mines over their careers. And they are currently technical advisors, but will be playing a stronger role once the mine is financed. So we've got about 320 million shares outstanding, market cap of Canadian dollars 208 million. We've got some pretty smart shareholders. Sibanye owns 10% of us. Sibanye is one of the largest PGM companies in the world out of South Africa. Management directors own 5% of the companies. That was all bought and paid for. There was no free stock when we founded this company. Jamie and I and some of the other directors have been buying stock in every single financing that has come along. Eric Sprott is in Wheaton Precious Metals, again, owns 5% of the company. So we've got a very strong set of, and we've got good analyst coverage from Pierre Vaillancourt, who's followed us for several years now and has a very strong buyout on us currently. And we're working to get some additional analyst coverage going. So that's the main part of the presentation. Just to summarize, we've our shovel-ready critical mineral project in Canada, best place in the world to be building a mine. We're gonna have the full project financing this half. We're trading at a severe discount to both our feasibility study and the spot net present value. We've got a payback of less than 2 years. At today's prices, it's about 1.3 years. We've got the team of builders, and we've got strong government and Indigenous backing. So checking all the boxes here and ready to go to build Canada's next critical mineral mine. So Julia, if we can move over to questions.
Thank you for the presentation, Kerry. As mentioned, we will start with the Q&A. Your first question for today, a viewer asks, what are the final requirements to start construction in H2 2026?
Real last one we have is the financing, getting the entire financing package. And we're not going to start construction until 100% of the financing is in place. We're expecting that to happen this quarter, and then start construction hopefully in September.
When will the actual breaking ground be, assuming funding is secured?
So as I mentioned, and that question came in before I mentioned it, but we're hoping to do that in September. So that'll be cutting trees, and hopefully by a month or two after that, starting to pour concrete and get the foundations in, and get it moving through the winter, and probably looking at up to a 2 year construction. Maybe we can make it a little bit less than that, but 2 years. Count on 2 years. You know, it took me 2 years to build my house, so it probably will take a couple of years to build this mine, and then we'll be ready to go.
When would you start a new drilling program on your property? Is there a potential problem with starting to cut trees because of bird nesting?
So drilling there's two questions there. Drilling, we have no current plans to do drilling. We are doing some groundwork over the summer to identify new drilling targets and that sort of thing. So, given a proper financing window, we might raise some money and we may do some more drilling, but we have no concrete plans to do any right now. We're focused on our deposit and getting it into production. And as far as bird nesting season goes, yes, it is starting soon, but it will be at its end by September, and that's when we intend to start construction.
What is the workforce number to be employed during the construction, and how many employees are needed to run the operation at steady state?
So the construction is going to be up and down quite a lot, but it will peak around 1,000 people. And we're actually quite fortunate because, like a year or a year and a half ago in Ontario, there were three major mines under construction. So a lot of that workforce were busy and employed. Right now, there are no mines being built in Ontario. So I think we'll have access to that workforce. And then once we're in full production, steady state is around 400 full-time employees. As well as there will always be some contractors and other things happening. And each mining job in northern Canada, of course, produces about two more jobs, spin-off jobs for contractors and suppliers, etc.
When might timber harvesting and road and bridge construction start at the Marathon Copper-Palladium project?
And again, that's in September, as I mentioned before. That's what we're hoping. And of course, I have to qualify that. It's definitely subject to financing, but we're anticipating that financing to come through.
Will there be a financing announcement before the end of the second quarter, or hopefully much sooner than June 30th? Is there expected to be dilution as a result of any financing announcements?
Yeah, you can't get away from the dilution. There will be some. The final number on that will be determined by a number of factors. One of them being the exact amount that we get from the bank, the exchange rate, because our banking is all in US dollars, things like that. But there will be some dilution. It may not go to market. We may not do a public financing. We've got a couple of very strong interests in some strategic partners who may take up that any additional equity that we have to raise. But so that'll all be determined in the next couple of months.
What have been the hurdles in securing the project's financing?
The hurdles, they're really being hurdles. I wouldn't call them hurdles. It's just time. Banks tend to take a lot longer. So going back a couple of years, we had thought we were going to have our permitting all ready, and the permitting took, unfortunately, a couple of years longer than we planned. So we put the banking and negotiations on hold. And then when we got our permits last summer, we reignited that. We had to do several studies with the banks on the engineering, to review the feasibility study on metal prices, on ESG, things like that. All these studies were done last fall, submitted to the banks early this year. The banks have been going through and approving them. We had hoped to have bank credit approval by the end of March. It's now looking like it'll be sometime towards the end of April. So that's the biggest hurdle. Once that is in place, some of the government money will be announced and come through. And then once that is done, then we'll be working on the equity side of it. So that's the sequence, and hopefully all in the next couple of months.
Is there a chance the company will be bought? And if so, what could that look like for shareholders?
Well, that's always a possibility in our business. I think that the takeouts, 4N is a good example. Once they got their construction mostly done, that was the optimum time for someone to take them over. So a lot of companies don't want the headache of construction. So getting through that would be would be a prime time. But I mean, it can happen. It can happen anytime. You can't really predict something like that. And then, of course, metal prices and other M&A activity will influence that kind of thing. But I will say that this is the seventh mining company I've started in the last 40 years, and the other six companies that I started at various times, for better or worse, were all taken over. So it's not it's not a dream to think that this company would be taken over as well, but obviously we would have to get a significant premium to where we are now. We would never give up the company at today's prices. We have no need to. We've got even currently, if the financing's delayed, we have about $40 million in the bank right now.
Given the current focus of financing the mine, could you please provide an update on how the project is addressing potential cost pressures from inflation? For example, are there any mechanisms or strategies being incorporated into the financing structure or project planning to help mitigate inflation-related risks?
So we're always keeping an eye on that inflation, and mining itself had a big inflation run from 2022 to 24, which is why we redid the feasibility study starting in 24 and finished it in 25. Interestingly, the team of people that we brought on to build this project, and they're all seasoned former De Beers employees. They built a big mine for De Beers in Canada some years ago. They actually hired an outside engineering firm to review all of that last fall, and before they joined us. And we passed that test on the inflation side. More recently, the banks did the same thing. They hired yet another outside engineering firm to review the feasibility study, and it looks like the inflation has been kept in check. The numbers that were done in the feasibility study, the most recent feasibility study, were confirmed as still being valid. So if we can get started this year, I think we're fine.
Beyond the currently defined resource, could you share your thoughts on the longer-term growth potential of the project? For instance, are there opportunities for resource expansion through further exploration or potential to increase production capacity in the future?
Absolutely. First of all, we've got two deposits on the property that are not part of the feasibility study, and the reason they're not part of the feasibility study was because the net present value of something 20 years from now is virtually nil. So there was a very little value in putting them into the feasibility study. But also the second factor was when we were doing our permitting, those ones had not had the level of environmental due diligence done in order to bring them into the feasibility study and into the permitting process. So we put those aside. So those could add about 6 or 7 more years to the mine life, which is at 13 years now. So that could bring it up over 20. We've also got some very strong noise just north of the deposit where we've had a number of good drill intersections. We've never drilled it off. Again, because we didn't want to mess up our permitting and try to add this to the size of the deposit while we were trying to get our permits in place. So that was a calculated decision. And but there's a lot. We have a very large property, over 400 square kilometers. The strike length of the zone that actually holds the deposit goes about 15 kilometers north to south, and then it turns west and goes for about another 20 kilometers. So we've got a vast area to explore should we decide to do that. But right now we're, again, focusing on building a mine.
What % of the design engineering is done, and how much is required before construction?
Well, when we redid the feasibility study, we changed a lot of things. We had done the detailed engineering up to about 35 or 40% a few years ago. But since we changed it and actually were able to lower the CapEx with the study that Ausenco did last year, that unfortunately means the detailed engineering, a lot of it has to be redone. And that started again in March. So we were probably at 15 or 20% based on the feasibility study. And that's going to be progressing through the year, so that we're at 65 or 70% by the time we start construction. So that's going on right now. We're spending the big money on that detailed engineering right now.
Will the mill be new or previously owned?
All brand new. Yeah, there's no mills like this around, so we may wind up getting 1 or 2 components used from somewhere, but right now we're looking at everything new. That's the feasibility cost. The construction cost is based on all new equipment.
Will generation mining be using local construction companies? You mentioned support from the province of Ontario. Hopefully they plan to Ontario-based companies.
We're going to send everything out to tender, so it'll depend on the best price and the best people, a combination thereof. And so I can't say that they will all be Ontario based. I expect most of them to be Ontario based, but one or two of them obviously could be outside of province, but certainly Canadian.
What gives you the most confidence that this project will reach production?
The confidence is in a whole host of things. First of all, the reserves being mostly proven, the feasibility study being current, and it's the third feasibility study we've done on the project, so we've looked at it in extreme detail. The financing package is coming together. The metal prices are cooperating with us right now. Copper being at $5.50, as I mentioned, pays all of the operating expenses. You don't see that as when a byproduct can pay all the OPEX. I don't ever remember seeing that in a mining situation. So everything is lined up for this project to go ahead.
Did the feasibility evaluate using contract mining?
No, we will be doing our own mining. Certainly contractors will be building the mine, and contractors will be doing the earthworks and the open pit, during construction. But eventually, we've designed in a user like our own workforce. But that can always change. But right now, that's where we're faced. That's where we're heading.
How many ounces of gold will be produced annually?
I think it's around 10,000, more or less. That gold, by the way, just to be clear, has been streamed mostly to Wheaton. In fact, all of the gold has been streamed to Wheaton, up to 150,000 ounces over the life of the mine. So we do have the silver, though, credit to ourselves, and almost all of the platinum, and of 100% of the palladium and copper.
Do you think that the projected global shortage of copper will push manufacturers away from electrification?
I think that the shortage of copper, if it continues, and it probably will continue, I think that it won't necessarily push them away from electrification, but it might stall some projects. A study that was done by a couple of university guys in the US, I think 2 years ago, showed that if the world does go and push for electrification of all cars, there's definitely not enough copper. We don't have enough copper, and that's just cars. If you look at the AI and the robotics and the military and all of the other things, there is going to be a shortage of copper, and that may stall some of these initiatives. They may not be able to get the copper. I mean, even now, some of the AI data centers that have been built are not operating because they can't get the electricity. So that's a stall right there, but there could be a stall in copper supply as well, and I see that coming. Not this year, not next year, but it could happen, say, by 2028 or 29 for sure.
Thank you, Carrie, for answering all of the questions today. If you did not get a chance to submit your question, feel free to reach out to the appropriate account manager here at Renmark. This concludes our presentation for today, but before we go, I will turn it back over to you, Carrie, for final remarks.
Please reach out to us as well if you've got any questions going forward. We'll be doing these presentations regularly through Renmark, similar presentations, so you don't have to tune into all of them, but certainly if you have more questions, tune into the upcoming presentations. I think there's another one later on in April, and then we'll be doing some through May as well. So be sure and go on our website also and sign up if you want to get, we sometimes have town hall meetings and introduce different people from our company to the public. So if you want to be in on some of those, please go to our website and sign up. And again, just thanks for the interest in the company, and please join us on our way up the Lassonde curve in the next couple of years.
Once again, this was Generation Mining, trading on the Toronto Stock Exchange under the ticker symbol GENM, and on the OTCQB under the ticker symbol GENMF. Thank you again to everyone in Chicago and surrounding areas for joining us today. Stay tuned for other presentations in your area. Thank you, and see you next time.